celebrating a special event. So let's jump straight into part one this week in Bitcoin. So we hit new all-time highs this week. My rule that I've been sharing for over 14 years since speaking at the first Bitcoin conference in Europe, when Bitcoin was around $3, is a pact that I said and I shared with everybody as we shared this whole journey on YouTube, is to own more Bitcoin this month than the previous month. Every single person in the world that has done that has felt like when they're buying at the top. Is too late, I missed the boat, is the emotion that they feel. But every single person that has done it for at least one halving cycle, which in Bitcoin world is 4 years, which coincides with the US election cycle, every single person that has done that has outperformed all real estate, all hedge fund managers, every product Wall Street produces, gold, real estate, stocks, bonds, absolutely everything. And it has always been the same story. I can't promise you, not financial advice, that the future will be the same, but I've been sharing the same information all the way through. And congratulations to everybody that followed that, where they own more Bitcoin this month, regardless of what the price is. You now own Bitcoin that is worth 111.8K. It's had a little bit of a correction, but that was the new all-time high that happened this week. And it coincided with yesterday. And so yesterday, for those of you that have been around over the years, 15 years ago, yesterday, we had a Bitcoin Pizza Day. That is when Lazo Hanyes, sorry if I always forget his name. I just know him as Bitcoin Pizza Guy. He traded 10,000 Bitcoin for 2 Papa John pizzas. He persuaded somebody to order the pizzas for him. He sent him 10,000 Bitcoin. Today, at new all-time highs, we celebrate every single week Bitcoin Pizza Day, and we've celebrated many of them, 14 years of them probably on this channel now. Those Bitcoin would have been valued if he kept them and didn't buy the pizza at more than $1.1 billion today. So those are the billion-dollar pizzas. And we remind ourselves of that because while we like spending our Bitcoin, it's always a reminder that when you have hard money, you always try and spend your fiat currency, which is engineered to go down in value, is backed by death, destruction, and a debt-based Ponzi scheme, where you end up funding wars and an enslavement debt-based system, credit system. Or you can opt out with peaceful Bitcoin. You can own your own money, spend your own money, and have a monetary policy that is hard money, fixed, and nobody can ever change. And because the money supply is fixed, as more and more people discover that they want to own their own money and spend their own money, and they don't want counterparty risk with the banking system, they end up paying a higher price because every 4 years, we end up with new adoption and less of newly created Bitcoins are mined by miners until eventually all 21 million Bitcoins are mined. We are pretty much have mined 20 million of them already now. So there's only another million left to mine, but you obviously buy them on a secondary market from other people. So when you buy them, you have to persuade somebody to sell them. It's a very, very liquid market. It's not something, but you may have to pay a higher and higher price because more and more people are discovering that they need Bitcoin. And it is the investment that allows them to opt out of all the atrocities that the proof of weapons network, the fiat currency violence that backs the fiat currency because of the debt-based Ponzi scheme, is something that they want to opt out of, or it's not providing them with the utility they need. So anyway, happy Bitcoin Pizza Day for yesterday. For those that celebrated, every year we have some pizzas to celebrate Bitcoin Pizza Day as a little reminder. And so what else did we have that happened this week? So one of the companies that myself and Bank to the Future invested in many, many years back was a tiny little exchange that couldn't get any funding called Kraken. And now it's a multi-billion-dollar unicorn expected to go public on the stock market in 2026 sometime. But ahead of its initial public offering, Kraken decided that it's going to be offering tokenized US stocks to users worldwide. And now where this becomes really interesting is the ability to go from one exchange to the other seamlessly. And this is why stablecoins became very popular in the beginning, because once you go from an exchange to a bank account, the bank often shuts down your account, asks you a lot of questions. It takes you a long, long time, and it's always been a choke point. And so we innovated stable coins, where essentially you could send a digital dollar. We'll go through stable coins today because new bills have been passed. But now it looks like we're going to replicate the same experiment 24/7 with tokenized stocks. And so while the stock market is only open between certain hours, this will move to a 24/7 market where outer market trading can happen based upon the underlying. And as more and more exchanges decide to do this, then you can go from one exchange to another, and we'll see how that goes. And so this is going to be very interesting for countries that have been ripped off gaining access to certain stocks. And so this is now opening worldwide, and it's another example of the types of things that are happening from our sector. Now, obviously, it's very, very different to Bitcoin. Bitcoin is a digital asset rather than a digital asset backed by a physical asset, which has certain problems and counterparty risk and various other things. But it's still an example of where this is going. And this is the world that the proof of weapons network, when they decided that they needed to embrace our system because they couldn't beat us, so they had to join us, they're looking to do with the very top of the proof of weapons network, what I call the CEO of the the fiat currency proof of weapons network, which is the asset manager BlackRock. They're looking to usher in a tokenized exchange of all assets, whether it be carbon credits, whether it be all the different types of products. It is something that they're looking to usher in, and we'll go through more of that. We also had, for those of you that mess around with the alternative chains, there's only one Bitcoin. If you haven't learned yet, I'm going to be releasing a video next week. I did an interview where I went through all of the objections that people have. It was a podcaster that interviewed me. We'll put it on the blog on simondixon.com. And I went through like 20 different objections that people have of why they don't buy Bitcoin. I can assure you, there's nothing new you're saying to me, but we all have the same objections. We all think it starts as a Ponzi scheme. Then we discover it's not. And then we come up with all the reasons why we wouldn't buy it. And then we discover that. So I went through all of those, and I'll put that on my blog next week. If you're not on my newsletter, simondixon.com, make sure you go over there. But we discuss how it's different to all these other blockchains, and people are always looking, hey, you can get this cheaper, faster, better. I'm not going to go through that right now. I'll save it for the other video. But here's an example of what happened on May the 22nd. One of these alternative chains, SUI, which is backed by the largest names in the industry and VCs, which shows you the problem with it, because Bitcoin was designed to exist without these centralized VCs, without these pre-mined coins, without the dependency upon all of these different things. It's connected to one of these decentralized exchanges, and the DAX, based upon this chain, was hacked for approximately $225 million. So again, this is the importance of using Bitcoin, holding it in self-custody, and not messing around too much with these alternative chains that introduce new risks and all sorts of stuff. Again, I'm not going to go through that right now. Just have it be known that this happens frequently with these alternative chains. At the same time, from the Proof of Weapons Network, I have been warning you over the last few episodes, that there is a new scheme designed to screw you from your Bitcoin by Wall Street. And I think the head of that is being executed by Howard Lutnick, the Commerce Secretary, whose company Cantor Fitzgerald is getting deeper and deeper and deeper into this sector. Not only is it holding treasuries and for stable coins like Tether, it is also launching public companies via SPACs, which are just designed to get Bitcoin, where you can issue debt-based products or equity products. And you can build these public companies that accumulate more Bitcoin, but put a company in the middle. At the same time, looking at offering the ability for you to hold your Bitcoin with them and issue you a dollar-backed loans where they can margin call at the same time as being a discount broker for the Federal Reserve. And so in that connection, when the proof of weapons network wants to create a pump and dump cycle, they can hike rates. They've got lists of different tools. But Cantor Fitzgerald is now deciding that the company is not just buying Bitcoin ETFs, not just issuing stable coins, not just custodying the treasuries, not just working with companies that are going to be accumulating Bitcoin, but it's also going to be buying a bigger and bigger position in MicroStrategy, as the company now called Strategy starts to issue many different types of products where it's got options trading to pay you yield, which is over 100% anytime you see these things. There may be a temporary things. They do not last forever. We saw all this with the, I've been covered it over the years on BitcoinHardTalk when we had Terra Luna, Three Arrows Capital Hedge Fund, Celsius, Voyager, Global Bitcoin Trust on the public markets, all connected to these carry trades. And then finally, it was treasuries that broke it when the Federal Reserve did a covert operation called Operation Choke Point 2.0 to come after the banks, to crash the exchanges. Then all the frauds came out, and they're all connected in a systemic system. The same is being rebuilt here. The end result is that all the lawyers and all the VCs and all the professional investors ended up extracting the value of the Bitcoin from these Bitcoin-backed loans and all the margin calls and all sorts that happen in between. This same setup is being set up, and I'm pretty sure that this is going to be utilized in order to extract your Bitcoin from you, margin call you. In the end, we won't know exactly what it looks like. I can guess what it looks like right now, but it's being set up. So Cantor Fitzgerald has now bought 1.07 million MSTR strategy shares for $326.5 million at an average price of approximately $304 in Q1 2025. And so now it is holding a position of 4.65 million shares in MicroStrategy, which are over currently $1.93 billion, which is approximately 49.8% of Cantor Fitzgerald's portfolio is all held in strategy. At the same time, Michael Saylor comes out of nowhere telling everybody to borrow against their Bitcoin, to leverage the public markets, to leverage the debt capital markets, to remortgage their homes and borrow against their Bitcoin, is propelled into superstardom out of nowhere, and creates the most successful company holding almost 600,000 Bitcoin right now, is deeply connected to Cantor Fitzgerald. These financial legacy that build these financial weapons of mass destruction. And we're getting more and more of these politicians and Wall Street veterans that are looking to say to you, don't hold your Bitcoin. Give it to me and I'll issue you a dollar loan. Don't hold your Bitcoin. Buy my stock instead. Instead of just having Bitcoin, why don't you lever up and get 2x and 3x? Why don't you put it in an ETF, and then my company will buy it in the ETF, and then we'll put that position in another ETF that is an ETF of all the different companies, and then you can use it as collateral and borrow against it. It is setting up the old Wall Street trick. So when the Federal Reserve and those BlackRock want to push out the signal, then suddenly Aladdin AI can be used in order to create a hike, a spike, manipulate it, margin call it, and part you from your Bitcoin. So just understand, if you are holding Bitcoin or getting exposure to Bitcoin via one of these mechanisms, you don't owe Bitcoin. You have a Bitcoin IOU. Now, it doesn't matter who does this. It gives them the ability to manipulate the price short term, but over the long term, this is the hardest asset. And you can sit back, and every time they push the price down, you can buy it at a cheaper rate. When the right goes up, you beat all of their financial products, but you can hold it in self-custody outside of their control and do a peaceful resistance against the violent proof of weapons network that in its final stages of the debt-based Ponzi scheme is looking to use our market to extract as much Bitcoin as possible and make sure that they come between you and your Bitcoin. Again, fortunately, Satoshi Nakamoto foresaw this, and the proof of work network that backs up Bitcoin said it doesn't matter who owns it. It's not like proof of stake with these other chains, where if you own the coin, you get a vote in the governance of it. It doesn't matter who owns it, but it does matter if you don't own it and you have a Bitcoin IOU instead. This is the point of Bitcoin. That's just something I'll be warning you against. It may take a few years. It will probably happen during the Trump administration, but we shall see. Just understand that, risk manage accordingly, and don't say that no one ever told you, because when I talk about these things, there is a rabid crew. And, I love the presentations that Michael Saylor gives, learn from him. But, just if you end up with all your Bitcoin in one of these proxies and IOUs, you don't have any Bitcoin. And when you need it, you may not be able to get it. Speaking of politicians, Vivek, he's got a new asset management company that he's starting to set up. Vivek Ramaswamy. I think he's, I don't know what his role, he was meant to be with the health in the Maha, Make America Healthy Again, and something went wrong there. But anyway, he's now in Strive Asset Management, and they are looking to buy up to 75,000 Bitcoin from the Mt. Gox claims at a discount to try and put more Bitcoin in a company with a new iteration of why you should own his stock instead of buying Bitcoin, and he'll put it in treasury. I mean, this is a very old story. This is 2014, the Bitcoin hack happened, and Bitcoins have been delivered, and it looks like he's trying to desperately find a new reason of why you should own his stock and put counterparty risk and trust me, bro, and public market disclosures and all sorts of stuff so that you can try and squeeze a bit more out of the highest performing asset in history. I don't know why people do it, but a lot of people fall for it. Speaking of the other financial terrorists from the Proof of Weapons network, Blackstone is now starting to hedge against some of its private equity. If you watched my videos previously on how the Proof of Weapons network, there's a video where we break it up, and I did one on understanding the Proof of Weapons network. You'll know that the private equity sector is a vital part of that, and Blackstone is one of the key players. They just disclosed that they're holding $1 million of the Bitcoin ETF. So now you've got private equity connected to public equity backed by Bitcoin through these ETFs. If your head is spinning, don't worry. You don't need to worry about any of this stuff, but just be known that all of the sharks are starting to get into the game because their fiat currency is coming to the end. We will talk about that in the macro section. But this is essentially anyway. At the same time, we'll cover more in the macro section about the relationship between Japan and US and their debt crisis right now and what's happening in the macro side. But in fear of what's happening in Japan, many were piling their money into their retirement funds that are stuck in the Japanese stock market, and they were looking for some Bitcoin exposure. And so suddenly we had people that were creating an ADR, an American Depository Receipt, which is a proxy on top of an American stock, or you could get the Japanese stock direct. Some of them were getting exposure to it in America, which is a Japanese stock, but in Japan, they were going directly into the stock that has been accumulating lots of Bitcoin, Metaplanet, and they were going in there to protect themselves by going into Bitcoin via this stock, and basically as a Bitcoin proxy. Metaplanet, you're starting to see it. The stock symbol is MTPLF. You're starting, to see more and more people that are saying, well, go into this. So what Wall Street is creating here is a million different ways for you to not own your Bitcoin and use it through them because they want to control it for you. And they're setting up, remember how this always works. The US market, the Federal Reserve debt-based Ponzi scheme, the treasuries, which are backing the stable coins. Then you get a load of Bitcoin in some of these stock market proxies. You leverage the debt capital markets. You get people to borrow against their Bitcoin through banking services, and then you're able to pull out money from the Bank of Japan through the Japan carry trade, and then you need to hedge out some of those currency risks between the Japanese yen, Bitcoin, and dollars. They structure more and more products, and before you know it, you've got Lego on top of Lego. And one day somebody gets something wrong. You don't know the risk. Some hedge fund is over leveraged. And then suddenly they need to do a liquidation event. That leads to some cascading liquidation. They need to sell their Bitcoin. You get a correction in the price. Your Bitcoin's all stuck in a Chapter 11 bankruptcy. They mark the market at the bottom to dollars. The lawyers start taking your money. And all of a sudden you're in their trap, which is what they do time and time again. In fact, the Federal Reserve has done it approximately 20 times since it was incorporated in 1913 in new flavors, new versions, and the latest is the Bitcoin version as well. I want to be really, really clear. This does not affect Bitcoin itself. They can manipulate the short-term price, but the long-term fixed supply is the hardest price to manipulate. And the reason they're manipulating it is because they want your Bitcoin, because they know that they missed the boat, and so they want to try and construct a game to part you from your Bitcoin and use leverage as a mechanism for doing that. At the same time, Trump's crypto czar, David Sachs, he's coming out and saying that stablecoins, the stablecoin bill, which was approved by the Senate this week, will unlock trillions and will push the basically trillions of dollars. And he was saying that it will pass with bipartisan support. And so David Sachs was saying that the ability to issue stable coins, they're telling you that what they want to do, means that they can back treasuries. And I've been covering this, I think I was the very first person to say that this is the type of thing. Everyone called me a conspiracy theorist back then. Now it's becoming a reality. Go back to BitcoinHardTalk like years ago, and you'll talk about how stable coins can be used for monetary reform. The treasury can take on the Fed if they choose by issuing their own and not, their own treasuries, and all sorts of engineering can happen. But they are setting up essentially a mechanism for issuing these stable coins, backing it by the US debt, so that when people are not buying their debt anymore, they can earn all the yield. The yield goes up. I'll cover more of this in the macro. They can take the yield from the government's debt. They can buy Bitcoin and they can go short the dollar, long Bitcoin, as we transition further and further into this debt-based Ponzi scheme, and all the things I've been warning as we transition to a world of Bitcoin, AI, and central bank digital currencies. Well, anyway, just as David Sachs predicted this week, the Senate announced that it is moving forward with what's called the Genius Act. We covered the Genius Act in the past. The Genius Act is essentially the US digital payment framework for stablecoins. And now I think it goes to the next stage. I said, don't worry if it gets objected to for partisan reasons, it will come back. This is a part of the strategy. Those that control the process will make sure it happens. Now, how are they framing this? Now, remember, we follow the money on BitcoinHardTalk, and they just put a narrative on top of it in order to frame it to you. But it's being framed as keeping the US dollar dominance and making sure that they can back it, which means they're looking to do a big print. They're looking to back these stable coins with lots of treasuries. And this is the final remnants of the debt-based Ponzi scheme. So they have two choices from here. They either do a monetary reform, but instead they're doing tax reform, which is redistribution of wealth. I won't go too deep into it. We'll do more in the macro section. But it's redistribution of wealth away from Main Street over to Wall Street when you follow the money properly and don't listen to their narrative. They either implement a monetary reform, which they're not doing, or they roll over the Ponzi, or there is a deliberate operation in order to strategically weaken the dollar, transition to the world that BlackRock's invested in. And BlackRock is the one that owns 20,000 stocks, has board seats on all the major companies globally, has technology that the Federal Reserve uses in determining, how to do its monetary policy. Also, Treasury uses it in determining how to do its fiscal policy. I believe was also the architect of the tariff policy in order to reset the world order to a multipolar world, because BlackRock is already invested in that multipolar world and has aligned with companies in the Middle East and also aligned with BRICS and is executing this transition, and then told everybody to get into Bitcoin, did the Bitcoin ETF, got all of the banks into Bitcoin to manage this transition while they roll over the final remnants with the stable coins. And then they're making sure that their banks and their portfolio companies get to benefit from owning all that Bitcoin while they asset strip America, just as they have been doing for Europe and UK. And they go further and further into austerity, using assets against the people, and just maximizing profits for their share price rather than having any government that actually represents infrastructure or anything that the people need. You're seeing this. You'll see this more across America. The beta test happened in Europe and UK, and then they push things into wars. We'll cover more in the geopolitical section as well. Anyway, the US has to the US treasuries, they're estimating that more than $1 trillion will be able to be backed in order to purchase those, or issue those US treasuries as well. But here's the important thing. In the Genius Act, the yield will not be passed on to the consumer. Now, if they wanted to do a redistribution of wealth to the consumer, then they would have issued these stable coins and passed on the yield to the consumer so that you can buy the Bitcoin using the US government debt. But instead, the issuer's going to be buying the Bitcoin with the yield on the US debt as well, particularly as yields are going higher and higher and higher, because it's getting riskier and riskier and riskier to lend to the US government. And then they get to buy the Bitcoin. So they get to protect themselves. And you just got to look at who's issuing the stable coins: the Trump administration, Elon, Facebook, all of the Meta, all of those around the Trump administration that are ushering in this technocracy, creating the data that's needed for stable coins and social credit scores and various other things that you'll be seeing over time. And the issuer is protecting themselves so that they can buy the Bitcoin and they can go short the dollar and they can leverage the US debt. It is a debt-based Ponzi scheme. It is a rollover of the debt-based Ponzi scheme. And I've been warning you against this for a long time. Once you know it, then you just need to position yourself accordingly. And so rather than doing a monetary reform of the fractional reserve banking system, which is exactly what America would do if it wasn't a mechanism for handing over control, which is the Federal Reserve System, to its shareholders, the private banks that went public. Those public companies are now owned by the asset managers, i.e. BlackRock, and then they can utilize all the large corporations and the investment banks to securitize and financialize all the assets. They can invest globally, and therefore it fully takes away any kind of sovereignty. And that's how Europe, UK, and now America have lost all their sovereignty, where the government just works for corporate interests. And you end up with the situation right now where there's this stateless entities that have significant more control than the state, and they can bribe all the politicians through lobby pressure and engineer through media the narratives that are needed in order to usher in what they're doing. Anyway, you need to protect yourself with Bitcoin. And at the same time, a company I invested in many years back, Bank to the Future Investors, invested in Circle, that issued the second largest stablecoin, USDC. It was announced or leaked that they are in informal talks in order to sell itself to either Coinbase, which was a company I was an early investor in as well, a public company now, or Ripple Labs, and many years ago invested in them as well. And they're looking to, there's a bit of an acquisition bid, comparing that with Tether, the largest one, the largest stablecoin issuer as well, connected to Bitfinex, another company I invested in early. You're starting to see the consolidation and more of these companies going public. And then Wall Street is able to engineer more of these companies through their games in order to try and get as much Bitcoin from you as they transition to this multipolar world that we're experiencing right now, that BlackRock is ushering in. Okay, to help you understand also the difference as well, America's biggest banks basically announced that they're going to be teaming up. This was a Wall Street Journal announcement in order to challenge the $254 billion stablecoin market, which is mainly led by USDC issued by Circle and USDT issued by Tether as well. And so they announced that the large clearing banks, JP Morgan Chase, Bank of America, Citigroup, Wells Fargo, and Tether became more profitable than Citigroup using this model. And then others through essentially co-owned payment companies, which are things like Visa, MasterCard, or the SWIFT network, they're looking to essentially create their own stablecoin. They said they're going to look into create their own stablecoin. Now the bill has passed. And this is kind of like what we saw with when large multinational corporations, when the internet first came out, they all built intranets and they invested, they tried to control the system. They created something inferior to the open source system. And then eventually they ended up using the open source system. It's only through lobby, crony capitalism and regulations that you can try and hold on to the control. And anyway, that drives people out to Bitcoin, which is the exit from the whole thing. But stable coins are like the bridge mechanism as we make this transition. So they made an announcement that they're looking to partner. It was on Wall Street Journal to create their own stablecoin. It doesn't surprise me at all. At the same time, we had announcements. Remember, I've been talking about how states can protect themselves using Bitcoin, because rather than at the federal level owning the Bitcoin and propping up the debt-based Ponzi scheme by giving more power to either the Fed or the Treasury to own Bitcoin, the individual states in America, if we're going more decentralized, which is my prediction, this is a fight, the real battle, not between China and America, not between Republicans and Democrats or Labor and conservative or left and right. It's actually decentralization versus centralization. And so I believe that America is going to go a bit more decentralized as BlackRock asset strips it, as it is with Europe at the and UK at the moment. We got the Texas House officially passes the Strategic Bitcoin Reserve Bill, SB 21, it is called. And that is for Texas states to be able to accumulate Bitcoin. And so we'll see whether they do it the El Salvador way, where they publish a wallet address, do it in self-custody, where they get true sovereignty, or whether this is just a mechanism for holding it via BlackRock's Bitcoin ETF, giving BlackRock more power as it weakens the federal state, and then as it weakens at the federal level, and then the states hold their Bitcoin with BlackRock, so that BlackRock can earn fees, and then they can determine whatever the plan is in order to have more control over the states, but this time at the private asset management level rather than the government level as well. At the same time, Senator Cynthia Lummis, who has been looking at creating a Bitcoin strategic reserve at the federal level, she came out and said that Americans are ready to update the US gold reserves with Bitcoin, essentially saying that when in the 1930s, after the last Great Depression that the Federal Reserve created, that led to the theft of gold, Americans had to hand in their gold for a Federal Reserve note at $20, later $35, and later it was revalued at $42. And they closed the gold window in 1971 because essentially you could get your gold at those fixed prices. As the market price for gold went through the roof, basically the banks and the large central banks could steal all the gold that was meant to be owned by America, and we don't have an audit right now. And if you want to weaken the dollar, you can just audit it and show, hey, the gold's not there. Whatever the current situation is, it's another tool that they can use. But because of this mechanism, you could revalue gold at the $42. You can't make the exchange anymore because the Nixon shot closed the convertibility of the Federal Reserve notes to gold, put us into this fiat debt-based Ponzi scheme, and led to the environment that we're in right now, that led to the creation of Bitcoin. Thank you very much. In 2008, a resistance was created against the Federal Reserve System, giving people the ability to own their own money, spend their own money, and have a fixed money supply. Well, Cynthia Lummis is essentially saying we can revalue our gold at the current price, which is approximately $3,250. And then we can use that in a market neutral way to swap some of that gold revaluation for Bitcoin in the market if they want to hold those Bitcoin strategic reserves. And we'll find out whether that bill passes. But more and more of these, Bitcoin is being used in order to short the dollar, go long Bitcoin, which is exactly what BlackRock got its clients into. And all you need to do is follow the money rather than listening to the politicians and ending up the bag holder, using what they're telling you to do. As they say, they're doing the opposite of exactly, what they're telling you to do. And that's why I want to make sure you always follow the money, and you own more Bitcoin this month than the previous month. And you can protect yourself from the Fed by owning it outside of their system. And you can protect yourself from BlackRock by owning it in self-custody as well. Okay, now we're starting to see a real merge between Bitcoin, macro with the stablecoin, and obviously the geopolitical section. When I first started breaking up Bitcoin Hard Talk into these three things, people are like, just talk about Bitcoin, stay in your lane, or I don't see how the macro part's relevant, or why am I listening to all that geopolitics? Well, as you understand, everything is starting to merge into one. And so now we're going to move over to part 2. That was part 1 of Bitcoin Hard Talk, episode 82, This Week in Bitcoin. Now we're going to move over to This Week in Macro. But just before we make the transition, I'm going to take a little bit of a water break in order to replenish my voice. But what I would like you to do, we are winning, finally. After years of oppression on the channel, we are finally edging closer to that 100,000 goal where YouTube will review my channel. And we are starting to get more and more subscribers. We were having reports before where everyone that subscribed in the censorship era wasn't being a subscriber, wasn't getting notifications. But now we are beating the algorithm. So please do comment below, repost, share this with other people. I want more and more people to be protected. And then we can get it through the next phase and get past that 100K subs. So we're getting closer and closer. So thanks to everybody that has been watching, and it is working. The content is feeling like it's less shadow banned. It's starting to be shared, and we're starting to get more and more comments from people that are finding the comments. So we are winning. Please help me get past that 100K subs on YouTube. Please repost this on X. In case we get shut down for any reason, we're backing it all up on Rumble. So please follow me over there. And if you want to download this and watch it in parts and do bit by bit, then you can head over to Spotify, look up Bitcoin Hard Talks, follow me there. Or you can do it on Apple Podcasts and you can follow me there. And then you can download it, have it direct, and you can watch it in bits throughout your week. Because I want you to have all the information, but I also want to make sure you got enough information to know how to navigate. This isn't the shallow TikTok videos where you get as much as fast as possible and you never develop the understanding on how to protect yourself. I give the detail so that you understand how to analyze this and you don't fall for more tricks. So follow me on X as well if you'd like it over there. And also join the mailing list on simondixon.com where I mail people on the newsletter, and I give all sorts of free things for those that want to join the free Bitcoin Hard Talk membership portal, including a digital copy of my book, the first book included to talk about Bitcoin. Great Depression of the 2020s video series where I predicted this, years ago and got people to be prepared for this, and all the different Bitcoin Hard Talk archives as well, all free. Just want more and more people to be protected for what comes next. Right, that's my little advert. Now we're going to move into part 2. And there's going to be this week in macro. I'm going to take a bit water while I'm doing that. Please share, like, retweet, do what you need to do, help the algorithms. And we've got a lot more information for you.